Welcome to another episode of What's Happening Here. Another episode of, okay, that's broken today. Sorry for that. Anyway, hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this, actually not so bad, Friday afternoon or morning, depending on where you are. I hope you all had a great trading week so far, a great week in general, and a nice Thanksgiving if you're in the US. As always, before we jump into the markets, let's first get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so everything you see in this live stream, the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is go and read the Elliott Wave principle, which you can read online for free when you're using the link in the description down below. That said, we can take a look into my portfolio. There we go. We have, again, a slightly break-even starting to the day with a little bit of a green touch to it. As always, or as for quite some time, our biggest position is in GameStop with 600 shares that we are selling covered calls against that expire in January. And outside of that, we have a few positions in other stocks. Some of those investments didn't pay off, like $444 that we lost betting on SunPower. Almost $600 that we lost betting on Greenwave, although that one is not bankrupt yet, so there's at least some hope. And a few other positions in Course, Neo Immersion, Barnes & Noble Education, and Faraday Future. All those positions that you see here are basically paid for with premium earned by selling cash secured puts or then selling covered calls, mostly in, or actually exclusively in GameStop. And yeah, with that, we can jump into the chart. We're not going to start with the crypto part. We actually start with GameStop. It's going to be interesting to see where we go from here. As said, I mentioned it in the last stream already that visually there might still be one more push to come, so that we actually should or could potentially hit the 33.82, 34.46, which brings the risk. I mean, we're already above 30, so it brings up the risk that my 600 shares get called away, which, however, would be okay in this case, because then we just sell the $30 cash secured put. I'm a little bit torn, but right now I would almost prefer to have them called away early instead of having to wait till January, because then I could, market's not open yet, but then I could sell new $30 cash secured puts that, are we at GameStop here? Yeah, nobody knows. No, that's not GameStop, but anyway, market's not open yet, so still takes 2 minutes. But we potentially could make another $3,000 in premium from selling the January 17 cash secured puts at the 30 strike price if we would get the shares called away early. So I'm partially hoping for that. And the other part of me hopes that we basically see either the top here or here, and then followed by wave 4 down, and then followed by wave 5 up, which means by January, when my options expire here, we might still be below 30. I still would have the 600 shares, and I can write another covered call, maybe at a higher strike price or so. But we'll have to wait and see. There's not much I can do. I could roll my option, but if I roll the options right now, it would also mean that I basically realize here the $700 loss. So while we got $2,800 in premium for those covered calls, which is quite nice, to be honest, for around like 2 months, so around a 20% return in 2 months on the money invested. If I would want to buy them back right now, I would have to pay $3,500 almost, or once the market actually opens, we will see the current rate for those options. So if I would want to roll them out, I would have to actually, take that loss and ideally find some option with a future expiration date and or a higher strike price that pays us in that credit. Which brings the downside, if we talk about rolling it further out, the next option would be the one in April, which means it's almost half a year, so it's not worth doing. So in my opinion, the best play, considering the current situation, is to wait it out and see if we will either go down from here in wave 4, if we first go down to 32.82, 34.46, and then go down in wave 4, and then basically hope that, so that one of those two cases hits, that whoever bought the 6 call options from me either eagerly exercises them already here, which gives us the time to sell more cash secured puts, or that they basically wait till January, and at this point we should see a set wave 4 and then wave 5, and might likely still be under 30 and have them expire worthless, which means we just pocket the $2,800 premium without giving the shares away. But even if they're called away, we got them assigned at 30 and we would lose them at 30, so we technically made no loss and actually earned a couple $1,000 in premium. So still not too bad. And for those of you who are 100% GameStop and so on and are worried about losing shares or whatnot, yeah, I'd like to mention I also hold shares at ComputerShare, and there they are, yeah, like safe in quotes. So they are not used for option trading and whatnot. And here and there, when through our premium we actually earn or build up our position, I transfer more shares to ComputerShare. Since May, I only transferred an additional 100 shares, but it's still an extra 100 shares that we actually paid for with the premium of other people. Yeah, anyway, so I consider right now visually that it could be a set 1, 2, 3, 4, and we still get a wave 5 push into this area here. 33.82 would be the one that I think would be mostly the maximum here, and then we get a wave 4 down. That about GameStop. Then we have our position in Barnes & Noble Education Inc. Yeah, I'm fairly confident that we were right here with calling the bottom at 845 and basically entering here, a little bit here and a little bit here. We only hold, I think, 49 shares, so it's not a huge position. As mentioned, paid for with the premium that we got from other positions, mostly GameStop. And there's still the chance that I'm wrong and we go down here and this turns into a ABC, ABC, and then ABC, which would mark the 78.6 retracement at the next potential target area if it's the bigger correction. But there are so many in quotes guidelines that we usually see happening that I consider this the unlikely scenario, and the more likely scenario is again that we have 5 waves finished here, correction finished, and we're about to get the next 5 waves up. So we're just going to hold on, because especially considering that our position is relatively small, even if we would go down here, we would look at a $150 loss, and that's basically like a 1% pending loss then on our portfolio, and we definitely would survive that. Yeah, moving on. Grab, yeah, we're on the weekly chart. It will still take time. Yeah, we only hold, or I only hold one $50 call position, so not 50 strike price, but I have $50 premium paid, so my risk here is $50. That expires in January 26, so there's still some time, and I believe this will turn out to be 1, 2, and now wave 3. So I think there will be a nice payday at the end of that extra year. Still not a huge fortune, but a couple $100. So in percentage, probably a couple 100% return on our investment. In absolute dollars, obviously not as impressive if we walk away with $500 to $800 in profit from that option, but we'll have to wait and see. Immersion had their earnings, and yeah, so far markets now already open. Yes, so far, yeah, not much happened. We're still waiting to have a distinctive push up to confirm correction over, or to break the bottom here to confirm I did something wrong with my labeling. Costs, yeah, also unchanged. We're still waiting for a breakout to the top here or to the bottom here to confirm correction over or correction not over. Next target 61.8. NEO, we are out. Oh no, we have a small NEO position, so we started buying single shares here and so on, and by now we have 100 shares under the assumption that we could potentially be finished here. But I also pointed out that it looks like we only have 3 waves down here, which means we would still need a wave 5 push, and we now actually hit the minimum target for that 5th wave. Doesn't mean that it cannot go a little bit lower, but that's fine, because again, 100 shares are. So even if we go to where our stop loss potentially would be, we look at a $90 risk here. And if we make any extra premium with other positions until then, we probably would increase our position here, because our risk reward ratio just gets better and better. And the labeling seems to be solid to me, that we have a 1, 2, 3, 4, and then we get a wave 5. The alternative would be that we have a 1, 2, 3, 4, 5. So that's wave 1, and we're currently in wave 2, and then after that we still would go up. So the safe stop loss in quotes would be at 363. If we break that, I'll have to reevaluate and might take the loss. But again, we talk about a potential small loss here right now, and as long as that doesn't happen, I would, especially here at the level of around 415 or so, 415 420, yeah, 410 to 420, I probably would increase my position if we have available cash at the time. Novavax, the one thing where I got it partially wrong, assuming that the correction finished here when it then turned out to be actually a bigger pattern. Yeah, we still wait for a break to the top of 1074 to have a confirmation that we are now indeed finished with the correction. We only have $250 risk in our current position with 2 calls that unfortunately expire in January 25. So very likely our calls will expire worthless unless we get a very strong move here. We'll just have to wait and see, but I'm not increasing the position until or unless we go above 1074. And that sums that up. Now, we had CrowdStrike recently where I said after or before the earnings that I expected to go down. So far, it's been going down. Profit targets are quite low for us. I'm not going to reiterate them right now because I don't have the sheet open at the moment. But again, my opinion is we're going down. We have Donald J. Trump, or yeah, the Trump Media, DJT. I believe it's going up. Visually, that also looks like a potential 1, 2, 1, 2, 3, 4. So wave 5 missing for basically 1, 2. So there should be some strong upward movement coming after this 3-wave corrective move that turns around at the 50% retracement level. But we'll see how that turns out. Yeah, I made my forecast here and predicted before the earnings that it will go down. Target area 1614 to 1341. We already touched these 16. No, we fell short by what's that, 6-7 cents. But again, I believe that there might be a little bit more room. Yeah, the 1341 is kind of like the hoping target, but the 1614 is the in quotes reasonable target for this here to play out as a proper corrective pattern. Even right now, entries wouldn't be that bad. However, one would have to put the stop loss down at 610, which means risk-reward ratio not perfect, but based on the pattern here, entries might already make sense. Unfortunately, my capital is all tied up in other positions, so we're not going to do that. Intel, we don't have any opinion here right now. We actually have a labeling here that we expect to go a little bit further down. That's probably 1, 2, 3, 4. So we get another push. Entries at 22.77 might make sense. Stop loss would probably need to be at 20.64. So 10% risk, potential bigger reward ratio. Take that with a grain of salt because we have the issue here that one of our labels or predictions here came true in one single candle with the latest earnings. And therefore, yeah, I decided to wait a bit for more things to play out before I make a definitive new prediction here. NVIDIA, we don't have any labeling, so yeah, gonna leave that out. RTX now actually broke the low here. I mentioned last time that based on their pattern, so actually when they were here at 68 or so already, I mentioned that based on the pattern, I would expect it to go down further. However, that there is the option that the retracement finished here, and that therefore with less than $1 in risk, or it's not dollars, it's on a different exchange if I'm not mistaken, but yeah, less than 1 price unit in risk, the risk reward ratio would have been great for, in quotes, just a small gamble. So super minimal risk with the stop loss at 67, with, if it indeed is the end of the pattern, insane reward levels. So however, it turns out that my original gut feeling, in quotes, that there is still a wave missing or a push missing was, in quotes, right, and it's going down further. I don't have a specific price target right now, but as I said, visually, it was based on this 1, 2, 3, 4, and we're still missing wave 5. So if we would want to have a target for a potential entry, we would have to pick the anywhere between 51. So I would actually pick the 57.89, the 78.6 retracement for suitable entry points, under the assumption that then it has 5 waves, 3 waves, 5 waves finished. No guarantees there, but that's basically a quick glance labeling here. SMCI, there we go. So as I mentioned, visually we have 1, 2, 3 not fully finished, or maybe finished, wait, 1, 2, 3, 4, 5. So we have 1, 2, 3. Okay, 3 just didn't hit our usual targets. 4 now likely finished, and now we might get the next 5 waves down. My profit or my target areas here around the $5 range, if I remember it correctly. And yeah, now let's jump into some crypto things. So Bitcoin went a little bit higher, so looks like we get a little bit more upside here. I believe that this is not the entire correction. I might be wrong, and this is a three-wave corrective move, but visually, oh, actually, I am I wrong here? 1, 2, 3, A, B, C. I might be wrong here with my previous assumption that this is 1, 2, 3, 4, and we get wave 5. I would be proven wrong once we break the 98,999 mark, because then that's an impossible labeling. Until then, it would still be possible that this plays out as basically 1, 2, 3, 4, and then wave 5 down. But it looks like I'm wrong with this assumption here. So yeah, we'll keep an eye on it. I mean, anyway, the fractional Bitcoins that I have, we just hold them. There is no active trading. Algorand is rising up, which is nice. I thought maybe we were already done here at the 261.8 retracement. Apparently we weren't. So next target is the 361.8 actually. So let's add that here, 361.8. So that's the next target area here that we would expect. We bounce here, but if we apply Kennedy channeling technique, we definitely did not finish third wave here. So it's more likely 1, 2, 3, 4, 5 for this move here, which is then 1, 2, 3. So one might want to consider to take profits at the 43 to 48 cents area. Then we get a wave 4, or should get a wave 4. It's also possible we shoot through this, but that's just my assumption that would be then the next area. Then we get a wave 4 and a wave 5. However, the little bit of Algorand that we have, I also just hold. Ethereum, yeah, I mean, we see visually 1, 2, 3, 4, 5 not finished yet. So there's a little bit more upside. I doubt that we will reach the 4,000 mark, but that basically, so that we'll basically see, I don't know, somewhere 3.7, 3.8. And then from there, we actually will correct a little bigger. Okay, there we don't have a proper labeling right now. Doesn't matter. Storage, still waiting for it to hit the 61.8 expansion level for the conservative labeling of A, B, C. C should actually still go higher, but to get out of the position there. And XYO, fairly confident that we have something like 1, 2, 3, 4, and there's still wave 5 in progress. Our take profit here is around 0 point, so at 1 point something cents per unit. We'll see how that plays out as well. And with that, we actually finished a position summary or recap in record time. The really important position in the portfolio, I mean, obviously all of them are relevant and have an impact on the return, but the really important one is going to be GameStop. One important aspect is going to be, will we close above 30, and will whoever bought the 6 call options from me exercise them, although they are still then not even break even. So I don't see a negative break even here, yeah. But basically, because I got $480 in premium, it would need to be at 34.81 for the option to be at break even for whoever bought them. But since they have a $30 strike price, I mean, you could exercise them also out of the money, but currently they are technically in the money, which means if we close above 30, there could be a maniac that decides to exercise them, which again, I actually would look forward to, because it would give me the chance to sell cash secured puts, either to wait and sell them on Monday, so wait for a decline in wave 4 and sell them quite low. However, that might mean waiting weeks, although during that time I might find other use for the capital, or sell them immediately at the $30 strike price, pocket another $3,000 in premium, and be happy to then in whatever January have my shares assigned again or so. So waiting would be the smarter play if I'm confident in my labeling, because best case I could sell then the $25 strike price cash secured puts, for example, when the price retraces down for an insane amount of premium, and as the price moves up, I could then close them without waiting for them to expire. So yeah, but that's pretty much the biggest position we're waiting for. I would be surprised to some extent if we close above 30 today, because there are going to be a lot of call options that are above 30, and so whoever is betting against GameStop has an incentive to make sure it doesn't close above 30. But that's pretty much it. So with that, we have everything summarized. There are no new predictions or anything for today. It's just about waiting. And yeah, I have to admit my returns this year are quite great. So we're looking at around 80% or 70 to 80% returns since the middle of May, since I switched to Interactive Broker. But I still sometimes feel that it's going too slow. Yeah, especially when I scroll through Wall Street bets and I see then, I don't know, people that, like just obviously gamble, but then the lucky ones that turn their whatever 10,000 into 200,000 with one insane trade. But yeah, I think slow and steady wins the race. If or when we actually get out of our GameStop position here, so by having the shares called away or by having a huge increase and closing it manually or whatever, I might start to use a small percentage of the portfolio also for high risk, potential high reward trades. But on the other hand, I also cannot complain because assuming, which I don't assume, but assuming even remotely the return that we had this year so far, or this half year so far, would be sustainable, the results would anyway be still substantial in a matter of years. So anyway, so that's it. Thanks for stopping by. I hope you had a great Thanksgiving. Don't forget, like, subscribe, enable notifications, enjoy your weekend, and then we see each other. I'm gonna check the Nasdaq schedule, but I think on Monday there is no holiday, so yeah, we already have December, so I have to check the December holidays real quick. No, only Christmas is going to be holidays. Okay, so have a great weekend, and we see each other on Monday for another episode of Daily Market Mastery. Till then, bye bye.